Good evening, students. This is Vishwas here. I hope I am audible. If I am audible, please do let me know in the chat window so that I can continue. Hi, hello Prince Austin. I can see 4 students here. Manimala, Venkatesh, Devi Mahalakshmi and Sakshi Goyal. Hi, all of you. Can you please let me know if I'm audible as well? Thanks a lot, Bhanupriya. Thanks for the confirmation. Hello, Amartya. Okay, I can see many people. Okay, thanks for the confirmation. Okay, today we'll be looking at the first lesson of direct taxes, that is direct taxes at a glance. So what we are looking at is what is tax, what is why is that we need tax, what is a necessity, what is that the government will do with the tax money which they collect from all of us. So these are the kind of things which are there in the first chapter of CS Executive Direct Taxes, that is in Module 1. And before we proceed further, let me just remind you, if you have not already filled the Google form, please do fill it so that we can intimate you regarding the live sessions. And also, tomorrow also we'll have the live session for direct taxes at the same time, that is from 9 o'clock. Okay, many students, thank you for joining us. Okay, let's start then. Okay. What is tax? What do you understand by tax? I can see the chat window here. You may reply to me using the chat window. I'll be replying to the same. Through the audio itself. It is far more easier for me to do that instead of typing. So what do you understand by tax? What do you think tax is there for us? Is tax required for CS students or CS as such? Why is that we need tax for CS? Any reason why we need to study tax, that is direct taxes as well as the indirect taxes? Of course, it's not as if we study everything in depth. The thing here is CS, that is company secretaries in practice, can also act as authorized representatives. Of course, clients. In fact, if you look at the GST laws, it has been mentioned that even a company secretary in practice is an authorized representative. He can represent the clients when it comes to matters related to GST. So it's not as if only chartered accountants or cost accountants should represent. Even CS can represent. I'm just looking at the message here. No video, only your photo loading, and can hear only audio. Vishal, can you confirm if you can see the screen there? I'll be using the screen rather than the video. It's far more easier for me to handle the lesson. I hope the screen is visible. Just confirm the same, please. Okay. Okay, regarding the need for tax when it comes to CS, of course, it's not as if that is our main area, but nevertheless, it doesn't make any sense to leave that aside, that is ignore tax. So for that reason, we have this direct taxes as well as indirect taxes as part of our syllabus. In fact, I recently saw an article where the CS Institute had in fact made representation regarding the inclusion of CS. That is, they said CS should also be part of the definition of accountant as per the Income Tax Act. In fact, there is a particular letter which the institute had sent. I'm just searching for the same. Anyway, so the institute back in August 2019 had made representation to the central government asking them to amend the Direct Tax Act, that is the Income Tax Act of 1961. So there, accountant means only a chartered accountant in practice. So right now CS is not mentioned in Income Tax Act of 1961 when it comes to representation in direct tax related matters. But now that the Institute of Company Secretaries of India has already made the representation, so you never know when the central government may, in fact, heed to the request of ICSI. If and then when it happens, I'm sure there will be an opportunity for CSS, that is practicing company secretaries as well, to take up matters related to direct tax. Now that we know that there is a need for direct tax, study of direct tax even for company secretary students, what is tax then? What is the idea behind this whole thing that is tax? What is this? Is this a levy or is this a demand? So if this is a demand, then who is that? Who is that entity or the organization which is demanding this particular levy? So this demanding organization in India would be the government. So it's a government which is levying the direct taxes as well as indirect taxes. My scope here will be restricted to only direct taxes. So the levy of direct taxes or the demand of direct taxes is made by the government. How is that the government can demand the direct tax from us, the citizens? Is there any right to the government to demand tax from us? So on what basis are they demanding the tax from the citizens? Very simple. For that, we have the Income Tax Act of 1961, which gives the powers to the government to demand tax from the citizens. So now, if this is a levy, which is imposed by the government on the citizens based on the Act of 1961, on what basis is this levy imposed? So there should be some basis for this levy. So what is that basis then? Again, the basis is very simple when it comes to direct tax. All we have to look at is the income earned by the individual or any other assessee. Income earned by an assessee. So this is the main basis on which the assessees are taxed when it comes to direct taxes. So that's the reason why we have the name direct tax. So once again, to recall what we discussed now, first of all, there is a levy. That levy is imposed on us. This levy is nothing but the demand is imposed on us by the government, in this case the central government, because income tax comes under the central government. And then this levy is imposed upon the citizens, and this is because of the Income Tax Act of 1961. Unless they have this Income Tax Act, they will not get any powers to impose or levy tax on the citizens. So everything should be backed up by some kind of statute. In this case, that act is Income Tax Act of 1961. Now, if they are imposing this tax, they are imposing this, of course, as we saw, on the incomes of the assessees. On the incomes of the assessees. These are there are various definitions, of course, which are relevant for the discussion here. I would suggest, if you have not already watched a few of our videos which we put up yesterday and today, I would rather suggest you to watch those videos. So it will give you a basic understanding of the terms which we are referring to, because assessee is someone who is required to pay tax on his own income or on behalf of someone else, or who has received a notice or demand notice from the income tax department. So such assessee has to file a return of income for the previous year. I will just briefly go through those terms here. So previous year is nothing but the year in which the assessee has earned the income. So if the assessee has earned the income in the previous year, when is he supposed to file the return of income? He is supposed to file the return of income in the assessment year. Now, unless we know the actual years, it will be very difficult for us to understand what is previous year and what is assessment year. So what we'll do here is we'll look at it from the point of view of an example. Let's say there is one Mr. A who is his company secretary. Let's assume that he qualified in the month of August 2019. Institute, as you all know, releases the results on 25th of August. That particular A has qualified as on that date. Immediately from the next month, Mr. A has started working. From September to March, because our financial year always ends on 31st of March. He has worked. That means he has worked for 7 months. Let's assume that Mr. A worked for a salary of rupees 50,000. So if Mr. A has worked for a salary of rupees 50,000, so what does this 50,000 represent to Mr. A? This 50,000 per month into number of months 7 will be 3,50,000. This entire 3,50,000 represents the amount which Mr. A has earned over a period of 7 months, that is considered as previous year. So let's say this 7 months, will quantify that. This previous year would be nothing but previous year 19 and 20. Why is this previous year 19 and 20? This is previous year 1920 because he has earned this income in the year 1920. So this is called the previous year. And this income will be taxed in the next year, that is 2021. This is called the assessment year. So whatever he has earned in the previous year, the same will be taxed in the assessment year. So he has to file the return in the next year, that is called the assessment year 2021, for the income earned in the calendar year 1920. So I can see various questions already. Let me just look at few of the questions. It's compulsory levy. Of course, it is compulsory if you come under the tax bracket. We'll come to that very soon. Statutory liability, yes. To maintain corporate governance and to see companies following tax norms. Okay, why? I think Mahalakshmi has answered to my question, why do we need tax? Then, who is an assessee? Assessee is someone who is supposed to pay tax on, as I said, for himself or on behalf of someone else, or someone who has received a notice of demand from the income tax department. Then, okay, I don't think there is any other question here. Okay, moving on. So now Mr. A has earned in the previous year 1920. That was his financial year. That is when he joined the employment. This previous year ends on 31st of March. So in this case, that would be 31st of March 2020. Now, once that year ends, we start with the assessment year, that is 2021. That is the next financial year. In this assessment year, Mr. A would be required to file the return of income. So Mr. A has to now file the return of income because he has earned income during the previous year, and the same will be assessed by the income tax department. Sorry about that. It's not act, it is income tax department. The same. Okay. Now, how frequently is one supposed to pay tax? Is it necessary that we pay tax every month, every quarter, or every half year? What is the frequency when it comes to payment of taxes? So again, it depends. In this case, it's one thing is very clear. We will have to file a return only once during the year. So we need not keep on filing the return every now and then, every month or every quarter, so on and so forth. Only once during the year. That's all. That is the assessment year. Then when are we supposed to pay the tax? Again, this is not such a simple question, because the answer to this is it depends on the tax liability. So when are you supposed to pay the tax? That depends on your tax liability. If your tax liability is more than the limit set for the advance tax, then you would be required to pay something known as advance tax. Right now that limit stands at 10,000 rupees. So in such a case, you will be required to pay advance tax. Again, we will look into advance tax in one of the forthcoming chapters, so we will not touch the topic now. But when it comes to the frequency with regard to filing of return, it is only once. Of course, sometimes what happens, let's take the example of Mr. A only. Mr. A has filed the return of income on, let's assume, 30th of June 2020, because as you recall, for him the assessment year is 2020. 2021 for the income which he earned in the previous year, 1920. Now, after filing the return, Mr. A notices that he has misspelled his name. So in that case, let's say Mr. A has written his name as Miss A. So now what to do? Can he revise the return? So now comes the question of whether that return of income which he has already filed can be revised. Of course, the answer to this is yes. You have already filed the return of income, but there are few mistakes, or there is a mistake which you ascertain later on. In that case, you can always revise the return. But there is one condition attached to this particular revision. That is, you have to file the return before the due date. If you do not file the return before the due date, there is no question of revision. So now what is the due date? Again, this will be discussed in one of the forthcoming chapters. We will not go into that, but for the limited purpose of Mr. A, the return due date would be 31st of July. In this case, 2020. So since he has already filed the return on 30th June, he has filed the return well before the due date. Therefore, in this case, Mr. A can revise the return since he ascertained or identified the mistake later on. Now let us look at few of the characteristics of tax as to what exactly are the characteristics or the canons. We'll come to canons later, but let us look at characteristics. So first of all, it is compulsory. So how do we say it is compulsory? That means, let's say Mr. A has earned income of 3,50,000. Should he file the return of income and pay the tax? Of course, yes, in caps. Because there is no option for A to say, I will not pay tax this year, I will pay next year. No. The Act says if you have earned income which is above the basic amount which is not chargeable to tax, then you are supposed to file the return of income and make the payment of tax. There is no option there. Again, if at all Mr. A refuses to pay tax, then of course he will be penalized. Sometimes just penalty, sometimes prosecution will also be there. So one of the most important characteristics of taxation is that it is compulsory. No one can escape death and taxes. That's something which we already know. Then what else do we have about tax? Tax is nothing but a contribution which is made by the citizens of the country. Now, why should we make the contribution? Why should the citizens contribute tax to the, in this case, government? When we say country, that country in this case is maintained by the government. So our contribution will be indirectly be made to government. Because so that they can take care of the needs of the citizens. If this government requires money, from where will the government get money? If we do not pay tax. For example, there are various things which for which we do not pay anything. For example, defense. So when it comes to the defense or security of the country, so who will take care of the defense or security? Of course, it is the army, navy, and we have the air force. But who is going to pay for that? Do we pay directly to army, navy, or the military for that matter? Definitely not. So in such a circumstance, it is the government which takes care of things like this. But for that, they require money. So from where will that money come from? That money will come from the citizens by way of contribution through various taxes. Of course, this is not the only thing which we have. We have other areas like healthcare, which is very important these days. Then we have infrastructure. So these are the kind of things which the government takes care on behalf of the citizens. And for that, tax is nothing but our contribution. So this is another characteristic of direct or indirect tax for that matter as well. Okay. Let me check if there are any doubts here. Okay. Sir, could you please speak a little more louder? Okay, let me increase my volume. So, okay, I will speak louder. Thanks for the suggestion. These are all we know, we want from third chapter. Okay, Akshay Jose, the thing is, the first 2 classes will be based, because we have to start from the beginning. It's not as if everyone knows, maybe you know, that's good. But there are others who might not be aware of the basics of direct taxes. So that's why we have to start from the beginning. If at all you're interested in lessons from the third chapter, I would suggest you to join our live classes, which will be commencing very soon after these 2 classes. What percentage of tax is deducted for a professional? Again, these things depend on the slab rate. We'll come to that later. I guess the handle name is Shri Aries. Okay. Let's move on with the characteristics of direct taxes. Okay. Then it's a public benefit. Tax is nothing but a public benefit. How is this how is that the public are benefited by something for which they pay? Again, it is closely related to the previous point. It is not as if it is used for only one individual. So if someone pays the tax, let's think of the richest person in India, let's say Ambani. Mr. Ambani no doubt pays the highest tax in the country, or maybe one of the top taxpayers. So if Mr. Ambani has paid so much of tax, can he demand that whatever he has paid, let's assume X amount of crores is the tax paid by Mr. Ambani, and now can he demand that whatever tax he has paid may be spent on him alone? Of course not. So this will be spent for public good. So for that reason, tax collected by one and all is meant for the public benefit and not for the benefit of any one individual. Then what else is there? Tax is paid out of the income of the taxpayer. Of course, tax is paid out of the income of the taxpayer. That means if there is no income for a particular person, then no income means no tax. Of course, I am referring to only the direct taxes. So if you do not earn any income during a particular previous year, then you need not pay any tax. Let's say, then what is this income? Income is nothing but any steady stream of revenue. So steady stream of revenue, usually it is a steady stream of revenue. Sometimes it could be one-off payment as well. But generally when we refer to income, it is a steady stream of revenue for a person. So on that steady stream of revenue, one would be required to pay tax. So therefore, unless a person earns income, there is no question of payment of taxes. Then what else is there? Again, the next characteristic is something which you have already seen. Who has the power to levy the tax? Of course, it is the government which has the power to levy the taxes. How do they get such powers? Of course, through the act, that is Income Tax Act 1961. Can someone else levy taxes? Of course, no. No one else apart from the government can levy taxes. It is only the government which has the power to levy and collect the taxes from the assessees. Now, the next characteristic is something which is really very interesting. Tax is not cost benefit. This is a misconception which many citizens have. Tax is not a cost benefit. Then what is this cost benefit now? See, many people think, let's assume someone, let's say Mr. A has paid rupees 35,000 as tax in the previous year. For the previous year, 1920. Mr. A has paid 35,000 as tax for the previous year, 1920. Now, can Mr. A demand that this 35,000 be spent for the benefit as per the wishes of Mr. A? Or can he demand from the government that I want to know, where have you spent this 35,000? Where has it been allocated? Unless I know that where exactly you have spent this amount, I will not make the payment of tax henceforth. Can Mr. A demand such a thing from the government? Of course not, because tax, as we know, is not a cost benefit analysis. So it's not something we can A cannot say what is the cost of my benefit. Like for example, this is the cost which I have incurred. Where is my benefit, or where is that you are spending this particular 35,000? This is not possible, because that's the nature of tax. The government may spend as and when it wishes to, in whichever area it wishes to. Then Again, tax is for the economic growth and public welfare. This is something which we have been seeing. The government is supposed to spend money for the economic growth and welfare, that is public welfare. Economic growth and public welfare, whether or not they spend is a different matter, but the government is supposed to spend a tax on economic growth and public welfare. Of course, the various things which we discussed, they all come under the same category. So these are the main characteristics of taxes. Now we have both direct as well as indirect taxes. So what is the difference between direct and indirect taxes? So is there actually any difference between the two? Of course, there are quite a few differences, but the difference is very obvious as well. So before we proceed to this topic, let me just check the chat window, see if there are any questions. Okay. Okay, Prince Austin says, sir, explain from the module. Priya Sadanandan has actually answered that question. Thanks for answering on behalf of me. The points are actually according to the study material. Less income, no tax. If you do not have any income that is below the basic minimum level, then there won't be any tax liability. Okay. Levy is nothing but the demand which the government is imposing on us. So spend for public theoretically. I hope it isn't theoretically, but they are supposed to spend for economic growth and public welfare. Sir, can you explain no direct benefit? As I said, you cannot demand direct benefit for the tax which you have spent. Like for example, I have paid 35,000. Can you please make sure that this 35,000 is spent on infrastructure, or can you please make sure that this 35,000 is spent only on healthcare? Such a thing is not possible. You may have paid, but your duty is only to pay, and you do not have any right to demand that this particular amount which I have paid should be utilized for a particular purpose. So that is the direct benefit thing, which is not possible in case of tax. Okay, what's the duration of these live classes? Vishal Vinod, this might go on till 10 o'clock and maybe a little more than that. Let's see, depending on the topic on hand. Okay, I think we can move on. Let's move on to the differences between the direct and indirect taxes. Now, if you look at the material, you have a table there. So I'm just referring to those points here. I'll just write down the main points, that is incidence and impact. So this is one of the most important points when it comes to differences between direct and indirect. Then there is burden. Then okay, liability of payment. It says viability, it's actually liability of payment. Then administrative viability. Okay, administrative viability. Then penalty. Okay, these are the points of differences as per the study material. I will just briefly touch upon this. So let's say this is direct tax and this is indirect tax. Now, incidence and impact. So now in case of direct tax, the impact as well as incidence is on the same person. For example, Miss A, a company secretary, has earned a income of, let's say, 17.5 lakhs in the previous year. Now the tax is imposed on Miss A. Okay, the incidence here is on Miss A, and it is only Miss A who has to make the payment of tax. So Miss A here cannot shift it to someone else. Whereas when it comes to indirect tax, let's say Mr. A shopkeeper, has sold a laptop for rupees 75,000. On that he has collected some amount of GST, let's say 18% of GST. Now, though here the liability of payment is upon Mr. A because he is the person who is supposed to collect tax on this particular sale, it is not as if Mr. A will be paying this GST out of his pocket. He will transfer that liability to his customer, who will be ultimately bearing the burden of indirect tax. So this is the quintessential difference between the direct and indirect tax. As the name itself says, In case of direct tax, the incidence and impact is direct on the person who is earning income. Whereas in case of indirect tax, it is indirect. It's not on the person who is supposed to collect. It is on the person who is actually buying that particular product or commodity. Then again, the next point is very closely related to the first point itself. They say the direct tax is imposed on the individual and organization, and the burden of tax cannot be shifted to others. Of course, it's the same as the previous point. We cannot shift the burden to someone else. Whereas in case of indirect tax, there is a scope to shift that burden to someone else. Let's take the example of some particular some industry. Let's say Apple. Apple Inc. manufactures, let's assume, MacBook. So MacBook Air. This is a laptop which is manufactured by Apple. Now when Apple manufactures this laptop MacBook, it will charge, I'm talking about Apple India of course, it will charge GST. Let's say the actual price is 85,000. On that there will be GST. Now of course, whatever GST the Apple company has collected, that has to be paid to the government. But is it Apple company which actually pays this 18% or whatever percentage that is on 85,000? Of course not. It will collect that amount from the dealer. Again, the dealer, that total amount will be cost, and on that again he will add his profit and then collect tax, that is GST on whatever amount he is charging, let's say X. On this again he will collect 18%. From whom? Again from the customer. So even the dealer is not paying from his pocket. He is collecting it from someone else, or maybe he is collecting from the retailer. So here, in case of indirect tax, we are shifting the burden from the manufacturer to the dealer, and dealer to the retailer, and retailer ultimately to the customer. Whereas such a thing is not possible when it comes to direct taxes. So whoever is earning the income, they will have to make the payment of tax. Then administrative viability. So this is interesting because who collects the tax when it comes to direct tax? The collection is actually made by the income tax department. So they are in charge of the collection of direct taxes. So if someone has not paid income tax, let's say there is Mr. B who has constructed a huge bungalow and he has constructed that in the heart of this city, and income tax department, they will get to know that Mr. B has never filed a return of income. Then they will make sure that they keep a tab on Mr. B's activities, and then finally after researching they might conduct a raid or search his premises, and then they will make sure that he pays the tax ultimately. But this entire process of identifying, researching, and then conducting a search, and then finally making sure that he has paid whatever is due from him, is a burden on the government, because it involves some amount of cost. In fact, it involves a huge amount of cost by way of salary to the income tax employees. So this is not as viable as the indirect tax. Cost of indirect tax collection is very less because it is all automatic, as we saw here, from Apple to dealer to retailer to the ultimate buyer. So in such a case, it's not as if you have to keep a tab on the assessees as much as you are required to in case of direct tax. And lastly, we have the penalty. It is levied on the assessee. Of course, if the assessee, let's say Mr. A does not pay tax, then the penalty will be levied on Mr. A. Whereas in this case, if let's say there is a shopkeeper AB who sells a laptop to Mr. A. Now A has not paid GST, so it will not, Mr. A will not be penalized, but AB who was liable to collect tax will be penalized. So this is with regard to the differences between direct and indirect taxes. Before we proceed further, let me just chat box to see if there are any questions regarding this topic. Okay. Direct tax levied on income or wealth of the person, says Amartya Sampath Kumar. Of course, earlier we had wealth tax as well, but now we do not have wealth tax anymore. So income tax is the only direct tax which we have right now. Okay. Burden can be shifted to customers. Of course, yes. 18% GST in electronic products. Okay, thank you. Here the portion includes old syllabus or the new syllabus, asks Purnima. Purnima, this is according to the new syllabus, but I think this should be, I'm not so sure whether this is there in the old syllabus as well, but I'm sure this will be helpful as well. Okay, these are basic introduction. It will be common to both. Yeah, that's what. Sendil Somi, thanks for answering on my behalf. Okay, now that we are done with the differences between direct and indirect, I think we can move on to the next topic. Okay. Okay, let me present to you some amount of interesting statistics. Okay, where is this table now? Okay, see, which tax is, let's say, contributing more to the GDP of the government? Is it direct tax or the indirect tax? Let me see if anyone can answer this question first. Is it the direct tax which contributes more to the GDP, or is it the indirect tax which contributes more to the GDP? Indirect, says Vignesh Prabhu. Okay, there is a question by Priya Sadanandan. An advantage for direct tax is written as it's an automatic stabilizer. What does that mean? Okay, this is nothing but, see, economy will have both poor section as well as the rich section. So the rich are taxed and it kind of stabilizes the economy, because whatever is the tax collected from the rich, we use it for the economic welfare of the poor as well. So that is the automatic stabilizer of direct tax. Okay, now let's look at the answers. Vignesh says indirect, 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 indirect. Okay, it's very interesting, but I'm very happy to say that all of you are wrong. It is the direct tax which contributes more to the GDP. So this is, of course, according to the statistics provided by the government of India. So let us look at the statistic here. So I have in front of me a table which says that sometime in early 2001, so let's say 2000, early 2000s, the direct tax contribution was very less. It was just 36%. This is in fact in the year 2000, 2001. The direct tax contribution to the GDP, or the total tax contribution, let's say total contribution is 100 with regard to both direct and indirect tax. Direct tax contributed only 36%. Whereas now, the latest figures are with regard to the year 2018-19, once again released by the government of India. Direct tax stands at staggering 54%. So over the years, direct tax has made progress for various reasons, and it is in fact contributing more than the indirect tax when it comes to the total contribution of all taxes. So though even I thought that it was indirect tax which contributed more to the total tax, but interestingly, it is the direct tax which has contributed more. Maybe in some time in future, maybe it will be more or less equal because of the streamlining of GST. Right now, I think because of the difficulty in processing GST returns, and maybe the whole thing is still new, maybe the GST collection is very low, but it should be ideally equal. Anyway, moving on. Let us do one thing. Before we proceed further, let me quickly deviate and look at the slab rates or slab or rates of income tax. This is actually part of second chapter, but still this is an interesting topic which I didn't want to leave out in the first class. So I'm just touching this topic briefly. Let us see. What is this slab rate or slab or rates of income tax? Now it's very simple. It is the rate or slab which is prescribed by the Income Tax Act, amended by the Finance Act every year, for imposition of taxes. So in this case, what the government does is, it will specify who is supposed to pay tax and who is not supposed to pay tax. So this is what the government does through IT Act and the Finance Act every year. So that rate is known as the slab or the rates of income tax. Now, what is the present rate then? So the present rate, again, this is something which hasn't changed from the previous year. The rate for individual and AOP, that is Association of Persons, BOI, Body of Individuals, and HUF, Hindu Undivided Family, stands like this: 0 to 2,50,000. The rate is 0%. That means if your income is up to 2,50,000, then you need not pay any tax. But if it is between 2,50,000, that is, it should be in excess of 2,50,000. If it is between 2,50,000 and 5 lakhs, then you are supposed to pay 5%. If it is between 5 lakhs and 10 lakhs, you are supposed to pay 20%. If it is more than, or if it exceeds 10 lakhs, then you, as an assessee of the income tax, you are supposed to pay 30% of income tax. Now, of course, this is slightly different to different category of individuals. We'll see that soon. But let me reiterate the same once again. 0 to 250, 0% tax. If your income is, let's say, 2,50,000 exactly, then you need not pay any tax. If it is 2,49,000 also, you need not pay any tax. But if it is 2,50,010 rupees, you will be required to pay tax. So that's how the slab or rates work. Now, this changes slightly regarding the senior citizens and super senior citizens. So now, who are the senior and super senior citizens? Let us look at that class very quickly here. If someone is aged 60 and above, that is greater than or equal to 60, then for them the basic slab changes slightly. So it will be 0 to 3 lakhs instead of 2,50,000. So this 2,50,000 will no longer be applicable to them. So the minimum limit here is 3 lakh. So that means up to 3 lakhs, they need not pay any tax. Okay, we have few questions here. Okay, Prince Austin asks, sir, what the government does with taxes? Okay, that's an interesting question. For that, I would suggest you to refer to the budget. So there is detailed presentation made by the government regarding what they usually do with the taxes. Sir, where can we get all the amendments for this year? Oh, of course, that will be provided as part of these live classes. Recent amendment 7 lakhs to 10 lakh, also there is slab, right? Okay, this is asked by Divash ASD. Divash, we are sticking to the assessment year 2020 and 21 based on the previous year 2019 and 20. So for this particular previous year and for this assessment year, this is the tax rate. So I would suggest don't look at the recent amendments because it is simply confusing. For the June exam as well as the December exam, that is 2020 in both the cases, this is the tax rate which is applicable. AOP, Association of Persons, BOI, Body of Individuals, correct. Then, sir, which slab are we to consider for this exam? The one which I have mentioned. Okay, I think I have answered your question, Madhumita. How would we count 60 years in case of AOP or BOI? Okay, very good question by Mustaqin. So this 60 or the next slab, which is 80, is not applicable for AOP, BOI, that is Association of Persons, Body of Individuals, and Hindu Undivided Family. In these instances, this age limit will not be applicable. This is applicable only for individuals. Only for the individual, this slight relaxation is there when it comes to the basic slab. So otherwise, for AOP, BOI, and HUF, the one which we just now saw, that is applicable. That is 0 to 250, 250 to 5, 5 to 10, and above 10. Okay, Prince Austin says, sir, you are a little fast. Okay, let me slow down then. Thanks for letting me know. Okay. Let me quickly erase this. So we'll move on to the next slab. So 0 to 3 lakh, it will be 0% for the senior citizen, someone who is aged 60 and above. Again, this is only for individuals, not for other types of assessees. The rest of the slab remains as it is. 3 lakhs to 5 lakhs, it will be again 5%. 5 lakhs to 10 lakhs, it will be 20%. And about 10 lakhs, if there is any income beyond that, it will be 30%. So this is for the senior citizens whom that is someone who has attained the age of 60. Now what about those who have attained the age of 80? That means if you are aged 80 and above, in that case again this changes slightly. So instead of the basic exemption limit of 3 lakhs, now it will be 0 to 5 lakhs. That means if you are someone who is aged 80, individual of course, or above, in that case you need not pay any tax up to rupees 5 lakhs. Tax will not be charged. Again, the rest of these slabs will be as it is. 5 lakh to 10 lakh, it will be 20%. And about 10 lakh, it stands as it is at 30%. So this is the slab or rates of taxes for both individuals and the other types of assessees. Now, there is something else apart from this as well. On top of all this, we have something known as cess, which the government collects for various reasons. Right now the cess stands at 4%, which is collected for health and education purpose. Health and education cess stands at 4%. That means whatever you pay here, on top of that, let's say this is X, the amount of tax which you are supposed to pay, on that you'll have to pay 4% again as cess to the government. So this is with regard to the tax. Let us understand the same with the help of an example. So that will be easier for us to remember the slab rate as well. Let us look at one example now. Let us say Miss B has earned an income of 6 lakhs in the previous year 1920. Previous year starts as and when they start to earn the income, but it ends on 31st of March. In this case, 31st of March 2020. So let's assume that she has started earning from 1st of April 2019 to 31st of March 2020. Miss B has earned an income of rupees 6 lakhs in the previous year 1920. Now let us assume for the time being that she is a resident according to the Income Tax Act. So again, this is a separate topic, that is the residency of an assessee. If you have already watched the video which we uploaded today, you would have understood who is a resident and who is not a resident. If not, I would suggest after we are done with the live session, please go back and check that video. It is part of the second chapter, of course. Now, Miss B is a resident. She has earned an income of 6 lakhs in the previous year, 1920. That is from 1st April 2019 to 31st March 2020. Now, she is supposed to calculate her liability in the assessment year 2021, which is there for our exams. So I would suggest don't look at the amendments at all, because whatever we have for this previous year and this assessment year is what is applicable for the June as well as December exam. So now, is there any concession for Miss B since she is a woman assessee? Of course not. Once upon a time there used to be concession for women assessees. Now there isn't any such concession. Let's look at the slab rate then. So 0 to 2,50,000, there won't be any tax, so therefore 0%. Her income is of course 6 lakhs. It has crossed this basic exemption limit of 2,50,000. The next rate or slab is 2,50,000 to 5 lakhs. On this slab, she is supposed to pay 5%. Now all we have to do is look at her total income. Her income is 6 lakhs. And has it crossed the limit, upper limit of the next slab? Yes. Then her income in this slab would be 5 lakh minus 2,50,000, which is 2,50,000 again. So in this slab, she will be required to pay 2,50,000, that is 5 lakh minus 2,50,000, 5 minus 250, which comes up to 2,50,000. On this, she is supposed to pay 5%. So which comes to 12,500 rupees. Now, has her income exceeded this slab as well? Of course, yes, because she has earned 6 lakh rupees in the previous year. So therefore, what we have to do is we'll have to look at the next slab, which is 5 lakhs to 10 lakhs. Now, has her income increased the upper limit of this slab as well? If you look at this income 6 lakhs, it has not increased. So now how do we calculate the income tax for this slab then? So let us consider her total income, which is 6 lakhs. So it would be 6 lakhs because it has not exceeded the upper limit of this particular slab, minus the lower limit of this slab, which is 5 lakh rupees. So it comes to 1 lakh rupees. On that, she is supposed to pay 20%, which comes to 20,000. So now what is the actual liability of Miss B then? So again, it's very simple. All we have to do is we'll have to calculate the total tax liability and then add cess according to the rates prevalent in the particular financial year. So in this case, it's very simple for us because it is 12,500 and 20,000, which will be 32,500. On this 32,500, we are supposed to calculate cess. That's all. Let me quickly erase this. Before that, let me see if you have any doubts regarding this. Why should we pay cess? Asks Bhumika. Again, this is charged for a specific purpose. In our case, that is in the case of India, this cess is charged so that the government can utilize that 4% towards health and education welfare. Okay, 33,800 says Ankush Gurnul. Is there exemption for women up to 3 lakh? No, sorry, no such exemption for women. Exemption is there, not exemption, I would say kind of discount or slight relaxation in kind of in case of slab only for citizens based on age. Sir, can you please repeat it again? Okay, tax on tax is cascading. Okay, again we are venturing to indirect tax area there. Anyway, so I will just explain this once again. So let me erase this. Miss B has earned income of 6 lakhs. We'll write down the slab rate once again, 0 to 2,50,000, 2,50,000 to 5 lakhs, then 5 lakhs to 10 lakhs. I will stop here because her income doesn't cross this particular slab. So now we have 3 slab rates here. So in case of first, there is no need to calculate anything because it is anyway 0%. In case of second slab, we should check if her income is exceeding the upper limit of this particular slab. What is her income? 6 lakhs. Is it exceeding the upper limit of this particular slab? Of course, yes. Lower limit is 250, upper limit is 5 lakhs. It is exceeding. Therefore, in such a case, what we have to do is we'll have to deduct 2,50,000, that is the lower limit, from the upper limit 5 lakhs. So if you deduct 2,50,000 from 5 lakh, what is left is 2,50,000 itself. On this, she is supposed to pay tax of 5% because that is the rate for that particular slab. So this comes to 12,500. Now we'll go to the next slab, that is 5 lakhs to 10 lakhs. So in this case, again we'll have to check if her income exceeds the upper limit of this particular slab. Of course, it is not exceeding. In such a case, what we do is we look at our income itself, that is 6 lakhs, minus the lower limit 5 lakhs. So now 6 lakh minus 5 lakh is 1 lakh. On this, we will charge 20% because that is the rate of the slab. So this will be 20,000. So now we will add these two, 20 plus 12,500, 32,500. So this is the tax before considering the cess. Now we have to add cess of 4% here, 32,500 into 4% gives us 1300. So if we add both, it will be 33,800. So this is the actual tax liability of Miss B. I hope I have made it clear. Let me know if there is any doubt regarding this calculation. Okay, there is an interesting question here by Vignesh. How about 87A rebate? Of course, 87A rebate will not be, applicable in this case, because there are few conditions which needs to be satisfied in case of 87A. So since Vignesh has asked that question, let me throw some light on 87A. Before that, is there any question regarding the calculation of tax liability in this case? Okay. Okay, I don't think there is any question. Let me just quickly move to 87A rebate. So this 87A rebate is an interesting rebate which we have now. So, but this rebate comes with few conditions. Unless those conditions are satisfied, there are few conditions which needs to be satisfied if you have to avail the rebate of 87A. 87A says you will get a rebate of 12,500 from the tax which you are supposed to pay. If your tax liability is, let's say, 10,000, that entire 10,000 will be given away as rebate. That means it's kind of a discount. It's not exactly discount, but we can roughly say it is like discount. But there are few conditions, either the actual tax liability or 12,500, whichever is less, of course. Now, what are the conditions? This is applicable only for individuals. If you are not an individual, then there is no question of 87A rebate. That is, the discount of 12,500 or your actual tax liability will not be applicable if you are, let's say, AOP, BOI, or a partnership firm, or any other assessee for that matter. Next, you should be a resident. If you are not a resident, then let's say if you are a non-resident, in that case, you will not get this 87A rebate. And the last condition here is, of course, one should remember that resident and citizenship are not one and the same. You might be a resident and you might still not hold the citizenship, and you might be a citizen and you might not be a resident of the country. So those two are different aspects. And the last condition being, your total income in the previous year should be less than or equal to 5 lakhs. Only in such a circumstance you will get the rebate from payment of tax. Otherwise, there is no question of payment of tax. Otherwise there is no question of applicability of 87A rebate. Okay. Vishal, please explain again cess in calculation. Okay. Cess, it's very simple. Let me just write down here itself. The 32,500 was the tax liability of Miss B before cess. On that we added 4%, which came to 1,300. So 4% on this tax. That's all. So how do we calculate 4%? This is 32,500 into 4%, which will be 1,300. So it will be 33,800. Okay. I missed this question from Deepak Hegde. Can a partnership firm or HF claim rebate? Okay, I think I have answered that question now. Okay. Prince Austin, how's the Josh? Oh my. I hope it's high. Anyway, moving on. Is there any doubt regarding the rebate? Let me ask that first before we proceed further. Any doubts regarding 87A rebate? What is the meaning of rebate? Rebate is the discount which you get from payment of tax. We'll solve a problem based on rebate now that many people have doubts regarding rebate. So let me solve one problem involving 87A so that you will understand for whom this rebate applies and for whom this rebate does not apply. Okay, let's see. Okay, let me take example of Miss C, who is earning an income of 5 lakh rupees, or let me be clear here. Let's say someone is earning an income of 4,50,000. So Miss C has earned 4,50,000 in the previous year, 1920. So on this we are supposed to calculate tax, including or rather considering 87A rebate. Of course, this is capital A. Now, once again, we'll have to look at the slab rates 0 to 2,50,000. This drill will be there for all the calculations when it comes to tax liability calculation. 0%, 2.5 lakhs to 5 lakhs, 5%, then 5 lakhs to 10 lakhs, it is 20%, then about 10 lakhs, it is 30%. So we need not be worried about these two slabs for Miss C because her income is 4,50,000 below the 5 lakh limit. Of course, in this slab, she won't be required to pay anything. Her liability will be 0. Now, let us look at the lower limit as well as the upper limit. First, upper limit. What is the upper limit here? 5 lakh. The lower limit, that is her actual income, is 4,50,000. So what we have to do is, from that actual income 4,50,000, we have to deduct the lower limit, that is 2,50,000. So the income which she has earned in this particular slab is actually rupees 2 lakhs. On this, we have to calculate tax, of course, at the rate of 5%. So 5% on 2 lakhs comes to 10,000 rupees. So this is the actual tax liability of Miss C. Now, can we apply rebate here? Has she fulfilled the conditions required under section 87A? Now, in this case, we have to look at Miss C. Is she an individual? Of course, she is an individual. We'll consider that she is also a resident. Okay, so she is a resident, she is an individual, so she has already fulfilled 2 conditions. The third condition being, she, or rather the assessee's income should not exceed 5 lakh. In this case, her income is 4,50,000. So therefore, she has also fulfilled the third condition. So since Miss C has fulfilled all the 3 conditions, Miss C is entitled for rebate under section 87A. Now, this rebate is very simple. The rebate is from the tax liability. Her tax liability is 10,000 before rebate. The rebate will be given at like this. It is either 12,500 from the tax liability or rupees 10,000, whichever is less. Now, whichever is less will be given as discount or rebate from the tax which they are supposed to pay. So now, her tax liability is 10,000. Since 12,500 or 10,000, whichever is less, in this case 10,000 is less, we will deduct the 10,000 from the actual tax liability. So therefore, Miss C need not pay any tax at all because she has fully utilized the benefit of section 87A. Now, there are few doubts here. Let me just look at it. What is the meaning of rebate? I think I have answered it now. How to compute marginal relief? Deepak, that's a separate topic. I'm sure I will be able to explain that, but it will require some time. Maybe not today, maybe in another class. Sir, you explained really well. Thanks a lot, Vishal. Sir, one more example of this sum. Okay, we'll see. Why don't you include cess in rebate? Okay, Sendil Somi, good question. Now, cess will come into picture only after you have calculated rebate. If there is no tax payable after you have applied a rebate of section 87, in this case the tax liability is 0. On 0, even if you apply cess of 4%, again it will come to 0 itself. So therefore, no need to worry much about it. Okay, Bhumika Kashipati asks, from where did you consider 12,500? Okay, this 12,500 is in section 87A. This is according to section 87A, that is a limit set by the act itself. Okay. Now, Rachana KP has a question. Wasn't the value of rebate 2,500? Of course, it was, but now the government has increased it. So it is 12,500. Priya Sadanandan, okay, 5% of, okay, now rebate is actually according to 87A. Please explain again, sir. If this is regarding not understanding the concept, then I will surely explain again, but otherwise I would suggest you to, once the live session is done, go back and check the calculation. What I will do is I will take a different sum involving cess so that it will be easy for everyone to understand what is rebate and how cess comes into picture if there is any rebate. So let us do that. Okay. Now, let us consider Miss R, who is 60 years old and earning an income of 5,50,000 in the previous year, 19 and 20. So in this case, what we have to consider is the basic slab does not start from 0 to 2. I mean, it doesn't start from 2,50,000, but it will be extended up to 3 lakh rupees. That means Miss R need not pay anything up to rupees 3 lakhs. That means even if she earns 2,99,000, she will not be required to pay anything. So therefore it is nil. From 3 lakh to 5 lakh, it will be 5%, and from above 5 lakhs, in this case I will restrict to this because her limit or income is only 5,50,000. Above 5 lakh it will be 20%. So here it will be 0. In the next case, that is 2 lakh rupees. How did we get 2 lakh? 5 lakh minus 3 lakh, upper limit minus lower limit, since her income is more than upper limit. So 2 lakhs into 5%, which is 10,000. Then above 5 lakhs, it is 20%. So how much has she earned, or what is her income in excess of 5 lakh? So that will be actual income minus the lower limit, that is 5 lakh, which is 50,000 in this case, into 20%, which comes to again 10,000. Now, let me ask a question before we proceed further. Do you think we should provide rebate to Miss R? Sakshi Goyal asks, sir, can you please share the notes that you have written in this lecture? I am using a software in which I have been erasing things. Nothing has been saved, but I think I can share the notes. That will be done. Please fill the form. We will get back to you soon. Manupriya, it was really great explanation with clarity. Thank you so much, sir. Thank you for understanding it. Okay, Vishal Vinod asks, why no cess was calculated for rebate? Please explain. Again, cess will come into picture only if there is tax. In the previous case, there was no tax at all. She had earned an income of 10,000 and we gave her entire rebate of 10,000. Therefore, there was no question of cess. If there is any amount left out, actually, practically speaking, up to 5 lakh, you need not pay any tax because the rebate is 12,500. So the answer to this question is no. All of you are right. Good. Because her income, of course, exceeds rupees 5 lakh. Therefore, Miss R will not enjoy the rebate and she will be required to pay 20,000. And on this will, of course, calculate cess of 4%. Because now there is no question of rebate. If at all, let us assume for a second that she has got rebate. This is practically impossible to happen, but just to answer your question, we'll think of this impossibility. Minus 87A rebate, 12,500. In this case, the residual income would be tax would be 7,500. On this, you may consider calculation of cess, but that is something which is not possible practically speaking. So therefore, I'll just quickly erase this. So since Miss R's income is in excess of rupees 5 lakh, in this case, Miss R will not get any rebate. So on that 20,000, she is required to pay a cess of 4%, which comes to 800 rupees. So her tax liability will be 20,800. Okay. Sir, I'm facing connectivity issue in place. In case this will be available in your channel to watch it later. I guess so. Aryan Singla, not good teacher. Okay, feedback accepted. If there is any doubt, I would be pleased to clarify the doubt, Aryan. Thank you, sir. The lecture was very good. It helped me to clear my concepts. Says Sakshi. Thank you, Sakshi. I did not understand the last concept. Okay. Again, what I meant was, if at all, we can, let's assume for a second that Miss R here will get the rebate. She will not get because her income has exceeded 5 lakhs. If at all she gets the rebate, in that case, let me just clear this first. So her liability is 20,000 now. If at all she gets rebate, it will be 12,500 because 87A says your rebate will be 12,500 rupees or actual tax liability, whichever is less. In this case, actual tax liability is 20,000 and 87A rebate limit is 12,500. So which is less? Obviously 12,500 is less. So now we will deduct this 12,500 from her actual tax liability of 20,000. So we are left with 7,500. So this is the amount of tax which Miss R is supposed to pay on whatever the income she has earned after calculating the rebate. So therefore, on that 7,500, what we are supposed to do now is calculate cess of 4%. If there is nothing here, then there is no question of rebate. Since we have 7,500 left over, even after considering a rebate of 12,500, we will have to now apply cess on this leftover portion. So cess at 4% on 7,500, if you can calculate that, so that will be the cess here. So 300 rupees. So 7,800 would be her tax liability, if at all she is eligible for rebate. So I hope you understood this concept now. Ganesh Kumar says, thank you, understanding the concept. Thank you. Thank you, Himanshi. I hope now you understood the concept, Pujashri, the one who asked for the explanation. Okay, Vignesh Prabhu says, thanks for the session, but one doubt before we get to tax calculation. I believe there is residential status chapter. Of course, yes, as I said, I'm jumping topics here so that we will have something interesting to do now, apart from just the theory. In fact, Vignesh, if you have followed the Ekcel Academy YouTube channel, we have uploaded one video of direct taxes regarding the residential status. We uploaded that today morning, if I'm not mistaken. I would suggest you to go through that video once we are done with the live session. When will you be taking GST class? Shubham, we already have GST classes done by Miss Raksha. I would suggest you to refer to those classes. Okay, Pujashri says, thank you, understood, thank you. Thank you, Belsi. Yes, of course, before doing tax calculation, we are required to check the residential status. That's why I said we are assuming that these people are residents. We'll come to that as well. I have already done, it is already uploaded, but we'll be again covering those topics as part of the direct tax live classes. Vishal, you know, the free classes is for today as well as for tomorrow. Sir, once again, explain the last example. Bhumika, I would suggest, please go through this once again. If you haven't understood, please leave a comment here after the video after the live session is finished. I will reply to you. Okay. Sir, how to solve MCQs? Okay, so we'll look at all these things once we are done with the syllabus, because the syllabus is vast. So I thought, let me first cover the syllabus, then we can easily look at how to approach the exam. So Nagaraj says, thank you, sir, really great time with you. Okay, thank you for being with us so far. Okay, what I would do is I will end the session for today here. If there are no doubts regarding whatever we have discussed so far. So if there is any doubt regarding this, whatever we have discussed so far, I would be happy to answer your queries. If not, I will end the session now and continue this again tomorrow at the same time, that is at 9 p.m. Okay, Prince Austin, sir, example little slow. Of course, suggestion accepted, Prince. I will try to be slow. Okay, since there aren't any doubts, I think we can finish this session now. I'll be continuing from where we left today. So I would suggest, please go through this video once again. And if you haven't understood any of the concepts mentioned or discussed here, you may ask the doubts tomorrow when we again meet for the live session. So thank you, Vaibhavi. Thank you, Chandrasekharan. Thanks for being with us so far. Okay, I'll be signing off now. We'll be meeting again tomorrow. Sir, do revision of today. Prince Austin says revision of today. Okay, we'll revise whatever we discussed today tomorrow and then move on with the next portion of syllabus. Sure, suggestion accepted. Madhumita Ganesh, I need your video class for CAAP old syllabus. What is CAAP? Please remind me again. I'm very bad with acronyms. So this slab rate only for individual, right? Of course, this slab rate is individual for individual. That is the 0 to 250, 250 to 5, 5 to 10, and 10 and above. This is applicable, bless see, for partnership, AOP, individual, AOP, BOI, and HUF. For individuals, again, we have this age limit, which we discussed. I would suggest please go through the video once again. I have discussed it at length. Can all the concepts be concluded completely in every chapter like this? Asks Ganesh. Why not? Because the syllabus is vast. Of course, the syllabus is vast. My approach would be to concentrate more on the application part, because if you look at the questions in the recently held exams, the institute has concentrated more on application part, not much on the theory. Of course, theory questions anyone can answer. All you have to do is look at the facts and remember, look at the provision and remember. But whereas when it comes to application, it requires some kind of understanding and of course some kind of practice as well. So I will be concentrating more on application part. So slab rates are the tax structure. Of course, slab rates, tax structure, they're all one and the same. Company accounts and auditing practices. Okay, of course you can visit the website. Sir, are you a CS? Yes, I am a CS, Prince. So to answer your question, I have passed professional exam of CS way back in 2012, I believe. Anyway, thank you all for staying with us so long. Please solve MCQ. Of course, we'll be solving MCQs because that is the pattern of exam. Without MCQs, we cannot conduct the live classes. But not now. Once we are done with the syllabus completely, then we'll definitely solve MCQ questions. Because otherwise, it's very difficult to look at anything without understanding the topic. So we'll do that for sure. Okay. So I'll be signing off now. We'll meet you again tomorrow at 9 PM. Thank you.